Hello everyone, welcome back to this channel. In our channel, normally we talk about
couple finance,
personal finance,
fire movement in Australia.
Fire. If you don't know what is FIRE, it stands for
Retire early,
financially independent. So we in the process of that. I think we're 80%
yeah.
around there. So we want to take you guys through our journey to be absolutely financially independent and retire early. We're at our 30s.
In our late 30s.
That's the secret. Anyway, couple finance, saving, budgeting, investment,
and
that's
everything
what we do,
else
right?
we're going to talk about.
Yeah, side hustles and side hustles.
Yeah.
You want to do that.
If you guys enjoy this type of topic, by all means subscribe, comment on any of our videos. We do actually read them in a regular basis or so. And yeah.
We upload that 3 times a week.
Yeah, if I remember. With all the busy schedule that we have, we try to upload this.
Oh well, we couple with 2 young children, so we're quite busy when the kids are around. We only can do it when the kids are not around.
Example like today, hence why we try to squeeze in while we driving.
Exactly, but we got our topics covered. Today we are talking about give you 7 tips about 7 habits that can help you to be smarter with your money. Sydney Road, thank you for the bumpy ride. Number 1, automate whatever you can.
Automated. Okay.
Yeah, automate. Like for example, for us, we just like our tax system in Australia. If you're PAYG, you got tax before you get paid. Why? Then I think there's a reason why the government do it, because they don't want you to overspend and eventually you don't have the money to pay the tax, right? So you have to do the same in your personal finance. What we normally do, we put we automated some money in our saving, some in investment, some in or
spending.
like the mortgage, or in our investment or direct debit or any other expenses.
Yeah. So
if you can.
Other things, like if you're not there yet in terms of mortgage and being buying investment property, automate, for example, your phone bill. Have that automated. Internet bills. Rent automatically deducted every week. That's what I used to do. I used to have every week a certain dollar figure just transferred. That way you kind of know what your expenses is, and you know how much you need to have per week before you can spend it on like luxury stuff, let's say, like non-variable stuff.
Yeah, correct.
Yeah.
You should automate. Everything is fixed. Then you know what
Every
is
week.
your take-home pay, and then minus your fixed expenses.
Yeah.
And then you know what you can spend.
That's
Otherwise, you'll just go paycheck to paycheck and not saving any money.
Correct. Yeah.
First, little tip. And second, I think it helps. Like lately, the second one, have specific, meaningful goals. What's your goal?
Not to spend as much. No. Okay, so specifically, okay.
Yes,
so,
specific and meaningful.
Yeah.
So our goal is just try to be don't work 9 to 5, work for ourselves, and slowly generate enough passive income. Then
to have on an
let
average.
our money to work for us, not us to work hard for our money. Once we have enough, like this, we don't need a lot. Enough passive income, we can spend more time with the family, with the kids.
For example, on our eBay business at the current stage that is being recorded, with an average profit after all expenses about $300 per week.
Yeah, around there.
So now, what is our goal is how can I grow that to $1,000 per week, because that's an average income. Let's say $1,000 per week. Now, how long would that take me? We're looking at projection maybe about 2 or 3 years. That's our goal. If it gets very specific time measurable, because we can only do certain things about 1 hour a day, but because we can only do 1 or 2 hours of eBay productivity per day, that's sort of measured, like achievable measurement, let's say. So, and that's where we're at.
Yeah, like for me, I think it helps. So all the money when we generate it from eBay, now we just put it to reinvest.
Correct.
Either we invest in buying more stock, or when we have spare, we put it in other investment on ETFs spaceship or raise
or concept pocket and all this stuff to generate more income.
Yeah, so I don't know, for me it looks like you have a plan and step and how long and what's the final figure that you want to achieve.
Correct.
Just
so
try to find it out.
We started up maybe like $100 a week, and then now we're up to $300 a week, and as you grow, your goalposts change as well. Like, okay, then so you achieve this amount, so now will be how can I make that from $300 to $600 or to $1,000? Because I look at it at the current stage that I'm recording this on an average income. Let's say if you can make $1,000 per week on generating income from eBay or side hustle and some sort, you should be able to quit your job if you're on an average income. So
correct. And then number 3, invest. Well, you don't need to be you don't need a lot of money, because at first I was thinking invest at least you need 10,000 or more or a lot, because majority of the people when they invest like hundreds of thousands of dollars, but you don't need. Thank you for Spaceship Race or this app, right?
Yeah, like
apps.
If you want to just there's a different level of investment. There's a startup where you're going to be a lot of your time and energy, but you're only going to receive a very small chunk of profit. Example, on eBay, we didn't put a lot of money in our eBay account, and whatever money that we receive, we reinvest it to the business. Okay, there's different one also would be like if you want to go on a property. If you're looking at $1 million property, of course you need about $100,000 minimum, just to get a 10% deposit plus costs involved, like administration costs, like stamp duty, conveyancing or lawyers and all that stuff on top. So different level. It's just depending what you're comfortable with.
Yeah, whatever spare money you have, I'll say.
Correct.
Right, you don't need a lot. That's it. Whatever you're comfortable.
Yeah.
If you're starting small, then
micro investment is probably the best way, and that way you learn so much from that.
It is.
Yeah, and then after that, apply it to your next investment or next vehicle after another vehicle after another vehicle.
Yeah.
So.
And next one, don't spend that unexpected cash. For example, tax return. A lot of people, when they receive the tax return, they just spend it.
Yes.
So for us, we normally do to invest. We use that money to invest on something else.
And don't rely that tax return to pay your future bill.
Oh, well, if you have debt, of course you pay it off first.
Yeah, what I meant is like, okay, I need that tax return money to register it on my car.
Yeah, so use it, yes. But
not
like you already have a phone. Oh, I got this tax return. I want to get a new phone. No. No, thank you.
So, like maybe if you do end up spending, try to spend something that can actually create more income.
Correct, because the compound effect on it is extraordinary.
Yeah.
And because it's unexpected money, you won't miss it anyway. You don't expect it. You won't miss it. You don't need it.
Yeah.
And the next one is prioritize high interest debt if you ever have any. If you do have any debt, pay off the high interest debt first.
You think so?
Yeah.
Okay, I'll go. Well, there's two ways on that. You look at the high interest debt, but for me, it's like the smallest value debt that you have. So, for example, if you have multiple credit cards, let's say one of them is 15% interest per year, and the other one's 20% per year. But the 20% per year, let's say, only have $1,000, but the 15% have $4,000.
All depends on your circumstances, but so, I'll go for higher interest first because eventually you will lose more money on that.
Okay, for me it's like I try to close that credit card first.
Yeah, both ways works.
It doesn't matter which way. Like try
your way to help the motivation because when I can finish paying it off in a week.
Correct. So like that's how I see it. I mean, you look at it a different way, but at the same time, it comes down to the same goal anyway. Pay off your credit card debt. We don't have any credit card debt. Even if we do, we don't pay any interest on that card.
Yeah. Number 6, track your spending. You can either go on old-fashioned, put everything on spreadsheet. Or you can use there are so many apps you can use on the phone for the budgeting, or they actually sync your payment or your credit card to the app. Then you know how much you have spent on certain of the stuff. If you understand how much you spend on these, or can I cut it down?
Some of the app these days, it's so like I'm a visual person. They give you a pie chart. This is the amount that you spend on coffee. This is how much you spend on everyday regular expenses. I was amazed, but the way I do it, I'm old school. I actually write it down on an Excel spreadsheet back then. Like, okay, my income this amount. What did I spend on that week? Okay, rent this, that. And then at the end of that week, how much do I physically have? So I'm old school. Like these days, I am so amazed that it's so colorful. The bank, even like a bank app alone, like it gives you a pie chart on ins and out of your money. I was like, whoa, that's kind of interesting. I didn't have that when I started.
That's cool.
So write down in pen and paper if you need to. Back in the days, I was a notebook person. I write it down how much on that day of what I spent and what money comes out. It helps if you look at it, how much money that is coming in and how much money is coming out.
And if you see in a particular category you spend more or unexpectedly, or for example your delivery food, because these days it's just convenient. If you think it's worth it, then keep it. If you don't think it's worth it, then maybe try to cut it down. Then at least you have a visual or your budget. You see that. And the last but not least, I think it's the most important for me though, learn however you can. Anything can improve your personal finance in general. Books, audiobooks, you're just asking yesterday, blogs, podcasts, video like these. And I think it helps me also join a chat room or forum to see what people asking, what they talk about, because talking money, it is not normal. Doesn't sound normal, right?
No.
When I talk about money with our friends or something, seems like it's not open. Seems like it's more open when you talk to a stranger about money.
I think it's because they're not in the same mindset. Like what you're doing, what we're doing, is not your normal conversation. Like I don't like going to a barbecue and just chit-chatting about nothing. I'm actually a lot more passionate about talking about this stuff because it helps you to grow financially. It helps you understand where you at and how you're going to be able to reduce
learn about
stress.
something new stuff.
Yeah.
Just because just because of joining the group and think I'm more into investment, ETFs, and see how people doing it, good return. Yeah. Just get tips and ideas about that.
Correct. I mean, I think because we also focus on it so much, and I figured I'd rather hang out with other people in
similar mindset.
Similar mindset. Yeah. Instead of just go in a blur.
But I think personal finance improvement is really important if you want to get this habit. You don't have to read 10 books a month. No. Just one a week is more. One a month is more than enough.
Yeah, if like once a year in the beginning.
Take it slowly. Just try to finish something. Just do something. Still, do something.
You should start action as quickly as you can as well, though.
Correct.
But everyone have their own goal. Everyone have their own, I guess, area where they're in life and how they're trying to improve. This is our way of contributing all the information that we gathered, and hopefully it helps you guys.
Yeah, hope that this helped. Okay.
So
thank you.
Talk to you guys
next
video.
time. Bye.
Bye.
Oh, you